Hello and welcome back to the Dividend Experiment, the channel that can help you build a sustainable dividend portfolio. The content that will be discussed is intended for information and educational purposes only and should not be considered investment advice or investment recommendation. This is our so much on the pie on Trading 212, and Trading 212 don't really do a great job of explaining what rebalancing is, but do a great job of putting a huge button on your screen that says rebalance in all caps. So it's not really surprising there's so much mystery and confusion about it. So today we're going to cover what is rebalancing, why would you rebalance, how often should you rebalance, when is the optimum time to rebalance, and finally how to actually do it. So what is rebalancing? The process of realigning the weightings of a portfolio of assets is known as rebalancing. Rebalancing is purchasing and selling assets in a portfolio on a regular basis in order to preserve an original or intended level of asset allocation or risk. For example, the typical slightly dated nowadays conservative portfolio would be something like 60% stocks and 40% bonds. This is conservative because stocks tend to be more risky, so the person building this portfolio is likely to not want to take too much risk, and so has a high proportion of bonds in that portfolio too. Over time, the stocks are likely to grow at a faster rate than the bonds if it's a bull market for stocks, and this means the portfolio will go from 60% stocks and 40% bonds to closer to something like 75% stocks and 25% bonds. Now, the investor wanted 40% bonds, not 25%, and that was because they were concerned about the risk. So although they didn't actually do anything, their portfolio is now too risky. Therefore, they need to balance the stocks and bonds back to their original allocation. This involves selling the stocks that are higher than before, then buying the bonds. This is rebalancing. As you can see, rebalancing will inherently buy low and sell high, which is the mantra of every good investor. If we use the example of the almost daily dividend portfolio, which many of you may already be using, we can see what rebalancing entails if you invest in individual stocks. If you've had the almost daily dividend for any length of time, you'll see that each stock has its own direction, and some grow at very different rates to others. This means that if you don't keep the portfolio balanced, they'll all be at very different values after some time. So why would you rebalance? As already mentioned, rebalancing will inherently buy low and sell high. If your portfolio has some big winners and some losers, you'll lock in the profit of the winners and take advantage of the fall in price of the losers. This only makes sense if you still believe in all the stocks that you're holding, though. In the case of the almost daily dividends portfolio, if you rebalance, you're potentially getting a better yield by rebalancing. As the relationship between price and yield percentage is inverse, or as one goes up, the other one goes down, selling stocks that have risen up and using the money to buy underperformers should, in theory, increase the overall yield. Of course, this does completely depend on the actual stocks being bought, but in theory you are increasing the amount you're getting back from dividend payments. How often should you rebalance? This is a good question. Now you know the benefits of rebalancing, why not just do it all the time? You'd be locking in the profits and taking advantage of every market dip, right? Well, the first thing to consider is that even with zero fee trades, you'd be facing some loss of portfolio value with attrition every time you rebalance. This is due to the spread on the platform you choose. Spread is just the difference between the immediate buy price and the immediate sell price, so for some stocks this difference will be wider than others. The second point is that rebalancing too frequently doesn't actually improve your returns by any measurable amount. A study was done on the following rebalancing time periods: monthly, quarterly, semi-annually, annually, and never. You can read the link to see the full details, but I will summarize here. The backtesting simply assumed $100,000 was invested in January 1979, with no further contribution or withdrawal since, and with no leverage applied. The results showed no functional difference between monthly, quarterly, semi-annually, and annually. However, when never was compared with the other time periods, it significantly underperformed. If assets are indeed held long enough, the relative weightings of each will become skewed, which will also in turn skew the risks in the portfolio unfavourably. The asset mix will no longer be relatively balanced, and this means that more reliance on a certain type of environment for the portfolio as a whole to do well. For example, if stocks do well over time and become a greater weighted proportion of the portfolio will become increasingly reliant on a higher growth, higher inflation environment. So to answer how often should you rebalance a portfolio, the answer is depends, but once a year is fine realistically. But when should you rebalance? So we know that once per year rebalancing is fine, but is there an optimum time of year to rebalance? Actually, when you rebalance, the benefit or negative impact is pretty much based on luck. Corey Hofstein's study found that for reasonably concentrated portfolios, i.e. 100 stocks, with semi-annual rebalance frequencies, which is common in many index definitions, annual timing luck ranged from 1 to 4%. So if you're using the pie feature on Trading 212, you can use your initiative when you look at the pie holdings section. If your pie looks like this, then it's probably fine. The allocations haven't slipped too far, and it's still in order. If your pie is starting to look more like this, then it could well be worth rebalancing, as that's now pretty far from your intended allocations. So when you should rebalance can be too hard to set for non-technical guys like us, so it's better just to set a certain date and then do it on that date each year. How to rebalance your portfolio. If you're using Trading 212 pie feature, then it's pretty easy. It will rebalance automatically for you as long as the market is open. All you need to do is click that button that I mentioned earlier. If you use another broker, it can be a little harder, especially if you're buying individual stocks. You'll have to calculate your ideal weighting based on the amount of money you have in your portfolio, and then buy and sell them all yourself, which is obviously a bit more time consuming. Something like ShareSite will help you calculate your portfolio weightings, but you'll have to do the buying and selling yourself, unfortunately. For us in the UK and Europe, I think Trading 212 for individual stocks and Invest Engine for ETFs are probably the best for rebalancing and building your portfolios in the first place, if you want them to be in a certain percentage allocation. What are your tips on rebalancing? Share them in the comments below. If you liked this video, and if you got this far, you probably do, I think you'll love the dividend experiment. Here are some things that you can do next. First, hit that subscribe button and the bell so you can stay informed for every video and update. I'll be making a whole range of videos that should help you on a journey to build a sustainable dividend portfolio. Next, if you want to stay up to date with the eToro portfolio, the daily dividend pie updates, any special offers, or sometimes even get free stuff, then click the link in the description to sign up to my email. I'll only send you things that I think will be interesting for you. Right now, I'm giving away my free 16-page guide that explains my philosophy on dividend investing, so if you want your copy, then go and sign up right now. Third, use the link in the description to head over to eToro to see how the dividend experiment is going right now, live, and you can even join along if you like to. Finally, open up a brokerage and get started building a sustainable dividend portfolio. I have some that I recommend in the description, and some will even give you a free share to start you off. Thanks for watching, and I hope to see you in the next video. See ya!